Joining us now is Claire Bodanis, who is Director at Falcon Windsor. Claire, thank you very much for joining us today. We've certainly had a big showing from the C-suite in recent weeks as they rake through all the numbers and the impact of COVID-19. What have the takeaway messages been for you?
I think the primary one is the need for honesty and telling the truth. Because as you rightly said, the COVID-19 has been a great leveller in the sense that everybody, all companies are facing the same set of issues. And so in a sense, there is absolutely nowhere to hide because everybody today is an expert on COVID-19 in the sense that we all know what's going on. So we can read into what companies are saying in a much more profound way than we could normally with the usual things and the risks that they are talking about. So that's the fundamental thing. So I think that speaks very well for companies that are well placed. It also speaks to a wider set of issues that people are looking for from companies today around environment, social and governance, ESG, because of course COVID is, the biggest social issue of our time.
There was an element of wanting fairness coming into these earnings and coming into the corporate strategy right now around dividends and payouts, that shareholders may see some cuts there, but the cuts should spread across the board. And we've certainly seen that in some of the job losses and the reductions in executive pay. Where do we go from here? What did you make of the tone that corporates are striking around how the pain burden is shared around COVID-19 at this stage?
Well, I think what's really interesting is that when we went into the COVID-19 situation, a lot of investors actually asked companies to consider their employees, to look after their employees, not to pay themselves too much, look at the dividend, particularly if they're taking company bailouts, because you saw how certain companies reacted and how the reaction to them went when they took company bailouts and then paid an enormous dividend. So it's actually been interesting that investors themselves have been asking companies not to just sort of focus on their results, but actually to look after people and to look at some of these other issues. And I think what we've seen then in the quarterlies, and then obviously we had a lot more trading updates than we would normally have at this time, that companies are indeed reflecting on those in a much more fundamental way. And the updates that we're seeing are much more operational, much more sort of granular and tangible than they've been in the past when they've really just been looking at outcomes.
I think the corporate commentary has actually been pretty good, Claire, I have to say, through this period, and particularly where companies are struggling to give an outlook or guidance on earnings. I think they've been very frank and they've been very upfront about that. What I do worry about a little bit is companies that conceal corporate restructuring that they were going to do anyway as a COVID-related act. Are you looking at this closely at all? Because it does feel as though we're in that kind of early 90s period again, where a lot of over 50s are going to lose their jobs. A lot of business restructuring is going to take place, and the kitchen sinking will be blamed on COVID, and that will be used to justify the actions, whereas actually it may be just a reflection of the fact that the business model doesn't work so well anymore.
Well, I think that's an interesting point. But also what COVID has shown is that those companies that were well run, that were looking to the future, that were managed well, actually have done better as a result. And so, a classic example in the retail sector, to give you that example, is Next, which has actually done far better than people expected. And that is because it saw online trading coming, it was much better prepared, it was better managed. So I think the companies that are better managed will come out of this better anyway. And therefore it's going to be harder for those that are restructuring in a sense in a bit of a panic as a result of COVID to hide that fact. It comes back to what I was saying earlier about the ability to analyze what companies are saying in a much easier way, because it's harder to say these things and explain these things and to just blame it all on COVID, because people are just not going to buy it, I don't think.